You are listening to Charting Wealth's weekly review and forecast for Monday, the 8th of August, 2016. It is great to have you with us. We have seen the week wrap up, and as soon as we finish this daily podcast for Monday, we will be recording the weekly podcast to get that out to you. And I really want to encourage you to listen to that. There's some interesting things to see, particularly on the weekly chart, and that has to do with the market topping, wondering just how much more energy it has to keep climbing. Again, realizing that this is an election year, may very well find that it'll continue to plug its way up, but I've got some real questions on that just looking at the charts. Now, those of you who join us every day, you know that we track three market indexes. The first is the total market, as shown by IYY, an exchange traded fund. That's its symbol. The second is SPY, that's Standard & Poor's 500. The third is QQQ, that is the NASDAQ 100. And the last one is GLD, which is gold. So let's jump right in and see what we see on our two-day chart before we go to the half-day. Two-day chart is our long chart. The weekly charts are double long. That's what's covered in our weekly review and forecast, that along with the news that affected the market over the last week and things that might be affecting the market in the coming week. But let's look at IYY first on the two-day chart. And forgive me, I'm at altitude. I'm rather high right now, so as I'm doing the podcast, you can hear me breathing deeply. What we have going on is we've got a open green candle, a rather good size one compared to the candles over the last few days. And that is the candle we have on the 5th of August. Now again, this candle, it's the first day of the two-day candle. It should wrap up on the 8th, which is Monday. And we have a two-day candle moving back up, actually above the two-day trend line that was broken by the past two down candles. The market was up 0.81%. Again, we continued to call it up. It never crossed over, going down. Derivative oscillator, however, has continued to lose energy. That is interesting in light of the actual price movement. Derivative oscillator and the MACD and the signal line have continued to move up over the course of the two-day candle after a big kink down back on the 29th of March. Finally started seeing some up movement with the new candle that's forming. And if we look at the 4-hour chart, what do we see? We see that there was up movement in the morning. It was a red open box candle. And again, it did not recover. The market didn't recover after it opened as much as the market had topped out in the prior day. And what we saw happen on the 5th, that is the last day of the week, is we saw some up movement in the morning and a little bit of a pairing off in the afternoon. Derivative oscillators continuing to lose downward momentum, but the MACD and the signal line are continuing to move down. We have never seen the pullback end after the short chart crossed over going down back on the 19th of July. It has just continued to trudge down. Now, what we've really seen happening, we can see that when we back off from the 4-hour chart, is we've seen a sideways slide going on since about the 14th. And when you join us for the weekly review and forecast, you will see how the market has continued to not rise over the last 3 weeks or so. Actually, almost 4 weeks now. It has not risen above a certain level, which again can lead one to draw the conclusion, once it is confirmed by price movement, hasn't been confirmed yet, that the market has topped out. Now, do we have an entry point to get into an uptrade? No, we don't. We don't have any entry point. We do have a market that's still technically up, but the 4-hour chart, which is our trigger chart, which is our action chart, has not crossed over going up yet. It may, in fact, one would think it would after it's been going down for so long. We shall just have to wait and see. Now let's go back to our two-day chart, and we're going to move on to the S&P 500, up just a fraction more than the total market was up. The S&P 500, as depicted by SPY, was up 0.82%. It too moved above the old two-day trend line, still in an up move. We've seen the MACD and the signal line start moving up again. However, the derivative oscillators continuing to lose energy. And if we go to our 2-day chart, still in a backup mode, it crossed over actually in the afternoon going up. Maybe some of you who jumped into that, and that's all right. You can sure do that. You may have jumped in right as the morning ended, as you saw that crossover starting to occur. That did occur in the afternoon, and the derivative oscillator flipped over at about the same time, which again leads you to believe that's some strong movement, probably based upon the employment report that we told you about last week. If you recall, when we did our weekly review and forecast, we explained that there was going to be an employment report coming out on Friday. Now we have seen the market tick up on that, and of course there was an entry point to get into the S&P 500 when that crossover occurred. Those of you who want to be safe, you can sure see what the market looks like on Monday. May be able to find yourself an additional crossover point. Again, it does look like the market is topping out, but there are always opportunities for those who will look for and find them. Okay, now let's go back to our 2-day chart and take a look at the Qs. Again, the Qs has been good to us, has it not? For those of you who have looked for those entry points and garnered them as we have pointed them out over the last few weeks, what do we have going on? The Qs, the NASDAQ 100, technology stocks, up 0.95% for the day. It is interesting, though, that we opened lower than our signal line. The market did close above that, but we like to have the bottom of the candle actually be on or above that 2-day trend line. It was not. Derivative oscillator also continued to lose speed. If we look at the 4-hour chart, what do we see on the Qs? We see another crossover and another potential, if you weren't already in the market, to jump back into it. We had those two down candles on the 2nd, and then the market has turned around and recovered again. Is this the 4th time that we've had a crossover, a pullback and a crossover, as we've continued to see the Qs move up? Now again, remember, what we look for is a long-term, that is the 2-day trend, to cross over and go up. When that 2-day trend crosses over and goes up, we then look for the short chart, that is the 4-hour chart, to go in the opposite direction. That's what we call a backup, and then move over back in the direction of the big chart. We've seen that happen now 4 times as we've seen this incredible track up since the market crossed over going up back on the 11th. Actually started, that's the 11th of July, actually started moving up back on the 29th of June. So the Qs has just had an incredible climb, the technology stocks. The only quirk we had was back on the candle ending on the 4th of August when we had a red open box candle. And again, that means indecision. If it's a red down filled in candle, of course, that means a down move. But we saw indecision back on the 2nd, and then the market turned right around to the candle and just continued, on the 4th, and then the candle just continued to move up again on the 5th with a large climb of almost a 1% up move in the market. Now, lastly, let's go to gold and see what we see there. Of course, gold crossed over. We warned yesterday that we didn't have a confirmation yet. It had just barely moved over going up. What did gold end up doing? Well, it crossed over hard going down. It was down 1.79% for the day on Friday. That is an incredible down move. So it is now confirmed down on gold. What do we see on the short 4-hour chart? We see a huge down candle in the morning, followed by another down candle in the afternoon. That all occurred at the same time that the 2-day chart crossed over going down. It's nice if and when you can get into those kinds of down moves, but they're almost impossible to call. Again, there were people hoping the employment reports would come out good, but you honestly never know with an employment report, even if it comes out good or bad, which way the market will actually move. That's why we are trend followers. We don't try to guess what the market's going to do. That is what you call gambling. because you can just as easily mistake how the market will react to the news, even if it's bad news. Sometimes the market actually reacts because it's already priced that in. It moves up. It's maybe not as bad as was thought. You just never know what will move the market. That's why we look for backups on the big chart, and then we look for the market rotating over in a case like this on the big chart. Then we look for a backup on the small chart moving in the opposite direction. Then when it moves back in the direction of the big chart, that's when we go to jump in. You want to know more about that? All you have to do is go to our website. We've got lots of good training there. And if, of course, you sign up at chartingwealth.com for our daily newsletter, we will send you a link to our How to Read a Stock Chart video, which explains exactly what we do. You can also follow us. We have posted at YouTube, and we've posted, I believe, Chapter 1 on the website. And we have chapters 1 and 2 at YouTube. You can actually read the first 2 chapters of our new book that we are publishing for you, chapter by chapter, about every other week online. Now, you appreciate what we do. We ask you to do 2 things for us. We ask you to please go to YouTube and subscribe to our channel. We are getting closer every day to hitting 1,000 subscribers. Of course, thousands listen every week, but 1,000 hardcore subscribers. When we hit the 1,000 mark, we will then be able to send you proprietary information to those subscribers. So we appreciate all of you who've done it so far. If you haven't, please take 2 seconds, show your appreciation, and subscribe to the channel. Second, go to YouTube and subscribe. Give us a 5-star rating. Say something nice about us. You guys have made us as high in the ratings as 6 in the world as far as stock market actual podcasts go, and we very much appreciate that. After we do this show right now, we are going to wrap up, and then we're going to do the weekly review and forecast, which you must listen to. You've got to have that knowledge and information as the market gets going in the new week. God bless. Hope that you had a great weekend. You're in the middle of one right now. Let us hear from you at chartingwealth.com. Please help us out in the ways we have asked. We wish you the best in your trading and investing, learning how to read these stock charts. It is the key to success in the market. God bless from chartingwealth.com.